You've been in fintech for God knows how many years, and I feel like, you kind of downplay it, but I think you have a deep, deep knowledge of like just the finance industry. And let's start from like ground zero. Like, how did you even get into the finance industry? Like, why that? Like,
Yeah,
say
that's
you're
a
in
really
high school,
good
college, like, why even go that direction?
that's a really good question. And I mean, it's been some time since I've really thought about the early path and tried to articulate it. But what it comes down to is I started out working in international development and was actually working with the former Soviet Union at a time when there was a lot of money going into that part of the world. I was working with the US government, but what I saw was that the capital that was flowing into Russia for really transformative projects was far greater than anything that the government where I was working could deliver. And the ends were very similar. We were hoping for fundamental systemic change. And I actually wound up, I had a fellowship to study in Columbia, which I turned down, and I took the plunge and I went to Moscow and I started pitching myself to brokerages to work there as an equity analyst. And someone said, "We'll give you a shot." And I did that right through the first of what turned out to be a couple of Russian crashes afterwards. But it's really what's informed actually everything that I've done since, because I look at everything in financial services from the perspective of, is it delivering equity? Is it getting more people access to the financial system with products that meet their needs and help them grow, right? So I made that transition from working in more traditional financial services, capital markets, and so forth to fintech when I came to Silicon Valley after building and then exiting a business in Moscow. And I worked with Kabbage initially. I was introduced to them by one of their investors. And as you know, I worked with your company as well, and I've continued to remain involved in financial services because I think that's really where we're going to see, a lot of change in the same way that, the early days in Russia were characterized by.
So I guess a question. So Cabbage was like 2016. You were even you know, invested in like the financial side for a long time. Even like Citibank, you
Hmm.
invest, Citibank is a financial firm. But I guess like going to Russia, like that's a unique opportunity. So you worked actually with Russia, like you said that really fast, like all of your work there. Like what did you like learn from, I'm assuming you were a US citizen, you went there and like probably learned a different culture, different monetary system, like probably different ways of doing things.
Honestly, so it's really funny. I was in New York after working in Russia for a couple of years at an event for tech firms. And someone asked the question, is there a lot of innovation in Russia? I don't know whether it was relative to my being there or just one of the speakers. Maybe that's why I was there. But I was just laughing because I was thinking about how much it fundamentally changed. And it's funny because a lot of the people even I got to know in the time that I worked in Russia have reemerged in financial services and financial technology. So, for example, I was working with the SEC on Russian listings while I was with the U.S. government. And Anne Marie Tierney was a counsel of the SEC who I was speaking with, who was also working on those same listings. And eventually she reemerged years later as, I think, chief counsel of Second Market. And she's continued to remain involved in financial technology and financial services. There are people like Yuri Milner, who made their name and built their track record working in Russia and innovating in Russia to build services that Russians needed, but reemerged on the world stage because really what they were able to do is identify opportunities and arbitrage opportunities that they could help deliver towards. I think I mean, geez, I was working at a Russian brokerage at a time when they were still, clearing, sort of share transactions in paper, with like T plus X number of days to, finalize a transaction. These things are still really meaningful, to tell you the truth, in markets today, and the areas in which there's a lot of work being done. Funny that you bring up Citibank because when I was at Citibank, I was actually working in payments. And someone said to me not long back, I've worked in payments since payments went from being Class C space, in a warehouse facility somewhere to, sort of Class A. And it's ironic that something which I did at the time to kind of break into financial services and was really at the bottom level has become such an important area of growth and opportunity today. So, there's been quite a bit of overlap and learnings that I've taken from my early days working in financial services. Sure.
I mean, in the early days, feel free to jump in also, Agam, if you have questions. But I guess in the early days, what have you seen change over like the last 20 years that really stands out to you as far as like change you've seen? I'm sure there's a lot. It's kind of a really broad question. And like because of that change, I'm sure you see a direction where like the way people are moving money or the way people are like storing money, like what do you see like from then to now? And then maybe like what does it even look like 10 years from now?
Okay, so I think it's clear to anybody working in financial services now that what's happened in terms of the technology that's available to us has enabled more firms to more quickly deliver financial products. Okay. And it's somewhat ironic, actually, that a lot of the work that went on in early days was focused towards the big banks, and can we deliver core banking systems? Can we help them innovate? But eventually, what's happened is you've developed microservices, you've developed more components of the technology stack that can be utilized independently and acquired and independently, which have enabled firms like your own to actually build up very quickly an interesting and unique, offer. Um, I think the challenge here, and I saw this when I was working with a company that first brought me to Germany, is that financial services is really still facing, like you still face some kind of core challenges that I don't think the technology alone is enough to solve for. So, I mentioned core banking systems and the innovation that happened, with companies that were targeting banks as targets, as customers. And the adoption curve for banks is very slow. And, you're dealing with this enormous, in-house infrastructure, which is resistant to change and which hasn't really, even if the technology's been available to them, had the incentives to adopt some of these new technologies and frankly take the risks. In the same way, when you look at financial service products like loan products and so forth, I think it's very hard to beat the fundamentals of the economic cycle, or even to provide meaningful signal in terms of understanding risk and being able to assess risk when you're evaluating a borrower. Um, you know, some pieces of this lie in, I think, um, uh, early assumptions that were made about the quality of the data that could emerge through greater integration of things specific around small businesses and so forth. But I think we're just getting to the point now. We're beginning to understand actually what data we do need in our systems to be able to assess risk. Um, and Obviously, with generative AI and so forth, we're going to have the greater ability to model around that data and understand, borrower risk defaults, things like that. So it's let's say we're going from sort of a technology stack challenge to now looking at what is the actual underlying data, the quality of the data, and then do we have the ability to model around that data to be able to take it and build new products for it. So that's kind of where the future is going to take us.
Interesting. Agam, do you want to jump in? I could keep going, but
Yeah, sure. Yeah, great, great. This is really interesting. So I have a question regarding, you said there are some pain points other than which are not solved by technology. Like,
Mm-hmm.
you said about adaptation and the rolling out of technology. If it's a larger organization, it's gonna take time.
Mm-hmm.
So where do you see, like, this problem solving? Like, do you see that AI taking over all the monitor's job, and all the specific items are taken care by the humans, or like what's the take on that?
Well, I mean, it's really ironic that, when I talk about companies that are selling to banks, new technology solutions that banks in many cases need, right? They have huge tech debt that they haven't addressed over decades. That's only multiplied as they make acquisitions and so forth. But the challenge hasn't been, with the technology. It's really been with the adopters and the incentives they have in place. Okay. In the same way, like, there's been a lot of push within the venture community and with innovators to develop new financial products that the technology has enabled. But owning a customer, being able to adapt to that longer term risk cycle, those are still, real headwinds, I think, for anyone trying to innovate. And, in some ways, I remember a conversation I had with, I guess he's now the CEO of Lending Club. And he said to me, this was some years back, we would like to kind of show that we can weather a crisis because no one really believes we can, right? And we have now been through a few crises, and I think we've learned from them, and investors themselves have learned too, the limits on growth and so forth. But it's a process of maturation. It's not going to happen overnight. So yes, generative AI will be disruptive, and it's coming, and it's coming fast. But I think owning the customer, understanding how to manage around risk and so forth from a financial perspective, those are still, real, headwinds that we continue to learn. It's the companies that actually are able to get through some of those challenges will be the ones that are really, the ones that grow.
Interesting. Yeah. I remember you touched based upon payments. You worked in payments earlier.
Mm-hmm.
And I have a question regarding what's the current scenario in the payments industry. Like, you see there are a lot of products coming out for P2P payments, for business to business payments, accounts payable, accounts receivable. And with all new things coming in, even the role of Fed now in the US, and lot of things happening in the world. Specifically, I'm currently in India, so I'll talk about UPI. UPI has been transformative as well. So what do you see, like, in next 5 years or 10 years, what's the industry gonna look like? And in just terms of, like, is blockchain gonna make any difference in it? Or do you see any specific currency coming, like BRICS, and some national level, or some group of countries coming in and putting out some monetary currency which is acceptable in a group of countries, like, and just in terms of open-ended payments industry?
Yeah, look, I mean, I've always been kind of a skeptic, actually, of distributed ledger, and frankly, the adoption that I see is much more in the investor community to replace things like gold than I really see it being used as a technology. And it's really striking to me that it even has achieved what it has so far, because of in terms of the expansion of Bitcoin ETFs and so forth, and the amount of money that's flowed into that sector. Because I look at the work that's been done over time by companies to try to innovate around what distributed ledger can enable in trade and so forth, and I haven't seen anything stick. These are massive infrastructure projects which require multiple parties to buy in and utilize them. So I don't anticipate any real radical change that's enabled by these technologies in the near future. Again, I mean, this kind of gets back to like, what are the core problems that you're really going to face? And it's not technology alone that will solve them. It is adoption and utilization, and like every time I looked at any distributed ledger type solution out there, I'd say the number of parties that have to buy into this before this even creates value is just stunning. Even if you solve it for one set of customers or one particular set of transactions, it's not something which is going to necessarily be meaningful to a business because of the many, many different suppliers and buyers that they might have in their ecosystem. So I'm not looking for major innovation here. I'm looking for incremental change. And I think, again, we're still sort of finding our way towards, what are the key drivers of growth. And again, I mean, in fact, in some ways, when I look at what you're doing with JustPaid, what I'd say is that, a year ago, I think when Daniel and I spoke, it sounded like the focus was not wrongly on payments. Now what I hear and what I see when looking at JustPaid is this recognition of kind of a customer-centric business, and the opportunity to deliver insights to CFOs and financial controllers and so forth, AI enabled, which is much more delivering to their needs and not saying here's a technology which we're going to try to tack on to what it is that the problems that you're facing, right? So I hope that's helpful.
Yeah, no, that is helpful. Sorry, go on, Agam.
No, yeah, just this is great. So, you touched base upon the blockchain side of my question, but in terms of the payment side, like if we just talk about the US market, there are like multiple things happening. I don't know if you have uh expertise in that, but if you want to just throw some light on your perspective on that.
Yeah, no, I really can't. I mean, it's been 2 years at least since I've even looked at this, and truthfully, I mean, um, oh, again, I like I remember years ago actually looking at when I had a trade credit startup, and I will go back to blockchain again, asking the question of people who were my advisors to whether or not this was the right technology to try to implement for my product. And what they were saying again was it's not the technology. It's not the technology which is going to drive the business. It's you can do this with a simple database. There have been multiple countries that have tried to innovate around supplier payments and so forth with new infrastructure solutions. And when you look at the global nature of trade, they haven't really bedded down at all.
Going back to just changing topics a second, going back to underwriting, and you kind of glazed over this, which was generative AI. Yeah, there's huge disasters happening all over the banking system, like not too long ago with Silicon Valley Bank and Signature Bank and First Republic. All of them, you would assume, have like protections in place and ways to like make sure that like they could model out the risk of what happened, but it seems like with SVB, they kind of disregarded like how the market could just change on them and that sort of thing. Do you think like, is there a way in the future to protect against that type of like disaster from happening, or does the government just have to back people up? But anyway, yeah.
I mean, it's really funny actually because that was a failure of oversight. Oversight's always 2020 in hindsight, right? Gee, what do we miss? What could we have done better? This happens over and over in different markets. But I mean, it's pretty clear that Silicon Valley Bank got too close to its market and its clients and was continuing a trade longer than it probably should have. It should have had a more diversified portfolio. It should have recognized the risk in this, highly concentrated group of clients. And what can you say? I mean, um, the role of a regulator is supposed to be to prevent institutions from making these kinds of mistakes. If no one's going to have perfect insight, you're always going to have problems. Yet we are doing a better job of moderating the economic cycles through better regulation, through greater intervention, and I mean, if we talk about lending and the mistakes that are going to be made in lending, I expect that we're still going to have problems, right? No one's going to escape from this 100%, even with new risk modeling and so forth. It's only as good as the historical data that you have, right? Um, uh, you know, and that really comes down to then I mean, there is a certain human aspect to underwriting, which I haven't really seen successfully removed from the equation so far. And it's really been interesting, understanding, what future risks might be. Um, uh, you know, they always, anybody who's a data scientist is going to claim it's a black swan event that they're looking at, but often they're not. It's just simply a scenario that they haven't modeled for, right? I don't expect they're going to be totally removed from the system. I do think, however, more real-time data around specific borrowers and around specific borrower segments and so forth, meaningful data, meaning like data that gives real signal, is going to enable you to respond more quickly. And a good underwriter should be able to identify trends and so forth.
Got it. So you think AI is going to be part of that, or would you
Oh,
say
I
like,
mean, undeniably part of it. Of course, it's going to be part of that. I mean, it's going to be a big part of that. It's funny. I was speaking to somebody at OpenAI just 2 weeks ago, and they were saying to me that right now what we have is like a kind of a bad child. That's who generative AI has produced for us so far, and that's a lot based on the data sets that it's working with. And if you think about where value is being created right now around generative AI, it's around unique data sets, higher quality data sets, and some of that is going to be like data sets, plus identifying what are the meaningful data points that come from greater integration with, let's say, SMB and so forth that a company like yours might have. Yes, you will be able to do more with it. I'm just saying I don't expect we're going to hit this point of perfect insight, perfect forecasting. We're always going to have problems. Regulators help to ensure system stability. They should also help to ensure that institutions themselves don't make basic mistakes in terms of how they model and so forth. We'll still have challenges. And I mean, that's where, like, when you look at any lending business, what I hate hearing, and I keep hearing this over and over, is both from founders and investors. Investors think, let's just throw more money at this and grow our way out of risk, right? Because we get larger portfolios, more diversification, and that's not the way to go, because you don't grow your way out of a bad portfolio. You're just getting more and more of a bad portfolio because you get worse and worse borrowers as you start acquiring, more and more borrowers, who are more marginal, right? But on the other side of it, the founders who are saying we're going to fundamentally change this, we're going to beat the history on this. I think they're just being naive. you have to be realists. You have to have some margin for error in your system, and be cautious and thoughtful about what that means in terms of how fast you grow.
Interesting. Um, Questions, Agam?
Yeah. So so we are talking about the banks, and I mean, I'm a payments person, so I'll talk about for a customer side of things, like for P2P and the way people interact money with. So I see that there are a lot of buzz about digital money and digital currency, like uh, there is a digital dollar now rolling out, and uh, the way people are gonna interact money in near future. Do you see any changes in that sense, like how people are gonna look at general ledgers?
I mean, it's it's funny because I was thinking about this, and again, it's been some time, okay? Um, uh, During the pandemic, where we were all forced to live very differently. And at that time, I went up into the mountains in California. Um, and I was thinking about the impediments to a digital wallet when your connectivity is incredibly limited, right? I'm living in Germany, which is fundamentally still a very cash-based economy, and where connectivity is a problem the minute you leave a city. Not to mention the fact that people here don't seem to want to have the traceability that comes from digital wallets and so forth. So, like, yes, it's compelling. Yes, it's the future. The question is, when will it happen? I don't see it happening overnight. I still see a lot of resistance to it. I hate to be this Luddite who's saying, like, things don't happen as fast as we'd like them to happen. But we just went through this experience, coronavirus, where everyone was looking for touchless, interactivity, and a lot of stuff was happening online that might not have happened otherwise. And yet, like, yes, it did advance, the adoption, of less cash-based transactions, but I still think we're a little ways away from, fundamental transformation that I think you might be hoping for. And I can understand in a country like India, with a population density, with the opportunity to distribute, capital, but even in India, like, how fast has the adoption of a digital ID taken place? I mean, it's still very slow, right? And like, that's a huge and transformative opportunity for India, but it just takes time.
Why hasn't America done that? Oh, so you said a digital identity?
Well, I mean, in India, it's a big thing because there's this question about distribution. Well, first of all, I think there's a large percentage of the population where you have trouble with a fixed address and so forth. Is that part of it? So having a digital ID and the ability to transfer funds digitally and so forth is something which would enable India to distribute benefits more easily. This is I've come up. Let's say I've read something about this. I don't know a lot about this. I'm guessing Again, you probably know a lot more. But it probably wouldn't be the same opportunity in the US. And we have obviously forms of ID that are, like, we have a national ID. It's just called a driver's license. That's all, state by state. But
No, yeah, definitely. So, it's like, in India, we have digital IDs, but the IDs which are used for payments is called UPI and is associated with a particular bank account. And you get a bank account when you have a government ID with you. So that's how they associate each and everything, and they bring up the authenticity of the payers and someone who is receiving the payment. So that's one thing. Yeah, I definitely agree to the point that it also matters on the adoption. And with a large population, adoption is really slow. But yeah, COVID has really catalysted all the pace on how the digital ecosystem has been adopted all over the world.
I mean, and what's the adoption in India right now for both the digital ID and the digital payments?
Oh, it's phenomenal right now. So if you just walk into a small village and if you just go into a small grocery store over there, you can find people using digital medium of payments and they're accepting payments through their phones. So it's because of two major changes. One is a demonetization, which happened five years ago, and right after that there was the pandemic, and another one which I could remember is because there's a company called Gio, and they rolled out internet for very cheap rate, like less than $1 a month,
Yeah.
and that's like 1.5 GB a day, and you just pay less than $1 a month. So that has brought in a lot of traffic, and people started getting access to fast internet. That's how the whole transformation has been in like 5 years, and currently the adoption is phenomenal. I'm here in India after almost 2 years, and I see the change.
It's really remarkable. I mean, it's funny in some ways. The United States is, and maybe not dissimilar to Germany in some ways. We have an infrastructure in place which works pretty well, right? So the urgency to adapt is not as great. And we're still using paper checks in the United States. Like I remember, 30 years ago, hearing of them is obsolete. And it's a bit like the New York Metro, that it was built, it's 100 years old, it's creaking at the edges, but replacing it is a difficult thing to do. In India, the urgency was really there. And as well, the high speed connectivity as well, it sounds like, or at least enough connectivity to enable, nationwide, and population density to justify the connectivity, right? Yeah, these are things which in some ways the US is lacking. I mean, they're exciting. I'd be curious to know how much in India traceability is a problem for people. I mean, this is a great anti-fraud measure, anti-corruption measure, is it something that let's say has there been a solution that's satisfied everyone here, or is there something that are there still a lot of cash-based transactions happening on the margins, which this system obviously would expose?
Yeah, definitely. So there are large volumes of cash transactions currently. Like, it's not gonna go out like in US. I whenever I still step out, I need to have some cash on my pocket. So I definitely agree to that. There is not 100% or not even 80% of adoption, but you have option to do that at every corner of the village or city or anywhere you go. Like you have option to pay them digitally. So that's one thing I would definitely say on the fraud management and taking care of like a traceability. Government has been stepping in and doing great work in that by taking a centralized authority on all the transactions and keep doing a KYC right before they are assigned a UPI ID, which is associated with the bank account. So that's how, like, they are taking care of like tracing all the transactions and where the money is moving and why is it. And uh, each year in March or April, there is like a particular audit where when you file your taxes on your income and expenses. So they do a phenomenal job on that side of thing as well, like, tracing all the transactions and balancing
I
where the
mean,
money has been moving.
look, I mean, I love the opportunity to tackle corruption and fraud. I think, or corruption. I think uh, I'm reminded of what I saw in Russia years ago, which was terminals that you could make a cash payment to. I mean, actually, this exists elsewhere as well. But the point was, there was like this explicit acknowledgement that people were going to continue to operate with cash. They didn't want traceability. They wanted to, get paid in cash. pocket it, and then pay a bill with it. There is, at some level, if they aggregate the data and they say you've been spending tens of thousands on many things that you can't account for based on your income, they might have been able to do something meaningful with it. But there was this explicit, almost acknowledgement with the technology enabling it that we're not going to have any adoption if we don't have a system that accommodates the way people are wanting to do business, and in Russia it was in a corrupt way, or in a cash-based way, let's put it that way. No, I mean these are great systems. I guess in Germany, I mean, you could say, well, part of this is probably tax avoidance, right? And that's going to be a bigger challenge. These are, and again, I mean, for me, like you have to have all the parties buying into the system as well in order for it to be a useful system. And when we're talking about international trade and so forth, it's very, very hard. That's all. I don't think you're going to. I don't think changing. How can I put it? There's a lot of opportunity in payments, but I don't think that my focus would be to create value around payment rails as much as it would be in enabling lending and so forth around data, right? That's really where I look.
I know India, there, we had someone on last week and they spoke about India and how that basically there's no loans happening in India. So like when you talk about like lending, it's just not happening in India, like a car loan or a business loan. Why it sounds like also in Germany that's like I mean, I'm hoping that there's lending there, but United States is driven on that, right? It's a very different culture. Maybe we put rails in place. Like, why is that?
I mean, I'd be so. I remember I was working with an entrepreneur who was based not in India, but in Vietnam, who had set up what was created essentially an OS for micro enterprises that would enable these small businesses, these micro enterprises, to uh, digitize their operations and created a flow of data that could be utilized by financial institutions to lend to them. Okay, it took the World Bank stepping in and the Asia Development Bank stepping in to push the Vietnamese banks to provide them with warehouse lines that they could use to then lend to these micro enterprises, right? There was a lot of institutional resistance and also an inability to use the data that this particular entrepreneur was creating around these micro enterprises. I think I don't know what the resistance would be in India. The funny thing about banks is that they're being forced to innovate because they're having their businesses and some of the more lucrative aspects of their businesses chipped away out by these financial innovators. But they still make a fair bit of money, and so as they don't have the same kind of incentives to take the risks that you might hope they would. Looking at it as a risk-taking entrepreneur, you're probably saying this is crazy. Why are they missing this opportunity? They're looking at you and saying, why would I bother? That might be what's happening in India. And again, I mean, is it high quality data? Is it the ability to, can you collateralize an asset? All these sorts of things really matter. In the case of Germany, I mean, look, I don't know what the levels of personal debt here are in Germany. But I can tell you that Germany Inc. and meaning the German government is reflective of a lot of history around debt and hyperinflation, and I think Germans themselves are pretty resistant to taking on too much personal debt because of the risks. Right? They're very conservative, I think, in their approach to borrowing and so forth and investing.
Got it. Got it. Changing direction just for a second. I guess you started your own company, ClearPort.
Mhm.
Like, why start a company? You founded it. like what was your reason? A lot of people don't start companies. Most people don't. Like, why would you go that path? And you were in, basically, maybe you could explain to the audience, like it was in the fintech space. It seemed like a really good idea, but I guess like if you could talk through it a little bit.
Look, the dirty little secret about ClearPort was that I was really trying to solve this problem that went back to the start of my career, right? Which was how to create economic opportunity and how to do it in the emerging world. Okay. And what I was looking at was international trade and the flow of goods from the emerging world to the United States. And I said, there must be a way to arbitrage risk between a US buyer and an overseas seller, right? And I mentioned Vietnam because I spent some time in Vietnam looking at Vietnamese suppliers to the United States, and they had real challenges actually obtaining capital for their businesses. I had an investor say to me at one point, he said, like never talk about, the ESG aspects of the business. It wasn't what anyone really wanted to hear in Silicon Valley. There was genuinely, I think, an opportunity in this. But that was initially what kind of spurred me to build this. It was based on what I'd seen at Kabbage as well in terms of the innovation in SMB lending and the recognition that data was really going to be a game changer, and that I would have access to data. I think the challenge for something like what I was trying to do was, like every lender is going to find raising a warehouse line, right, and structuring it, and it was still international exposure, a very complex business, and at the end of the day, you really needed to own the customer. And who was the customer going to be? Right? Was it going to be the overseas businesses? Was it going to be the U.S. businesses that are buying from overseas suppliers? Like if you hadn't solved for that problem, then nothing else really mattered, right? And there's always a cart before the horse problem, of lending, which is called you need capital to lend, but you can't raise the capital unless you have customers, a really kind of a catch-22 problem, in lending. So.
Did you have investors in your company at all, or was it all
No, it's all my own
bootstrapped?
capital. I bootstrapped the damn thing right up until coronavirus. Then I said stop.
Got it. Okay, so it's
Yeah,
the coronavirus that really
yeah, kind of killed it. Yep.
got it. Um, Interesting. So you didn't have funding, and it was fully you owned it yourself. Were you looking for investors for that company, or you just felt like you could build it on
No,
your
no,
own?
no. I was. But I was coming from the Kabbage experience where I'd seen a lot of venture money flow into Kabbage and try to push it to grow. I think beyond a point which I felt was sustainable. That's my personal perspective, but again, you start acquiring marginal borrowers when you grow a lending business too fast and too far. And you can't kind of grow yourself, out of a problem like that. So I was really focused on building a business that raised a warehouse line with um, non-venture money. Was looking at sort of more private equity, lower rates, didn't want to put a lot of equity actually into this. It was too complex the way I was trying to structure it. But, like I also avoided, I think what were some pretty big implosions, when coronavirus hit and a lot of lenders who had venture money behind them found themselves out over their skis. So, you know, how we hit our wall is different in every case, but that was my particular one.
Got it. What makes a successful fintech company? Sounds like Kabbage had some secret sauce. Like what makes like I don't know, what's a hot fintech company? Coinbase?
I mean, look, I like the guys who are playing in data, to be completely honest. I really do. I mean, I so you know, banks as institutions that are able to acquire funds at low cost um, are kind of a hard game to beat, with their scale and so forth. Everyone out there who's got a fintech, and particularly lending fintech, is trying to gain access to that. So then the question becomes, all right, well, what piece of this puzzle should we try to solve? And I think the limited insight that or not just limited insight, but I think we have not fully exploited the opportunity that we have with more sort of fingers into the data stack of companies, and into transaction dynamics and so forth. Like the more we're able to dig into that and then extract from that signal, the more value we'll be able to create. So I get excited by companies like Kodak, for example. And again, I mean, I'm thinking in my SMB world, but they seem to be doing a really interesting job of like pulling data from different sources that can be used by financial institutions, to be able to provide new products and so forth, and lending products to customers. So those are kind of the companies that I like, the data ones.
Got it. Interesting.
And honestly, I mean, I'd love to see more companies do more with their own data. There are like the company that I worked with when I first came out to Germany, was a large contract manufacturer that had a lot of insight into the product performance of the companies that they were working with, and to the supplier, supplier costs and so forth, the companies they were working with. The challenge was, and the input cost, the challenge was, did they have the right data? Did they organize it the right way to be able to use it to lend in that case as well?
Got it. I know we're almost near the top of the hour. Agam, do you want to take it away with like a last question or so?
Yeah, like it's just gonna be generic. Like, where do you see the world as a whole moving towards, like, on a geopolitics scale, talking about Germany, US, India, emerging economies coming in and contributing towards the world economy. Where do you see the whole financial state of the world gonna be like? We entering into a recession, or is it because of the war which is happening over the world? Like, what's the current state and where do you see it going?
Well, that's a big question, and I probably not even qualified to answer that one. I mean, um, you know, so we're at a funny time where you see a lot of strong men around the world, and women, if you're talking about the Italian, what is it, prime minister, who seem to be pointing in this nationalist, us for ourselves direction, right? And I would say that the U.S. isn't immune from that either. It's pretty clear. And I think that's a much riskier world. That's a world like interdependence, has kind of brought us to where we are today in terms of the global order, right? Greater integration in Europe means that, wars between Germany and France aren't really a risk anymore, right? Um, and I would say on top of that, layer the kind of idiosyncrasies that come along with some of these authoritarian, tendencies, right? It seems like personalities are driving decisions rather than the collective insights of an entire nation. Okay. But the funny thing is I'm still looking at, kind of where growth is happening in the world, and where growth seems to be sustainable I'm still really encouraged by what I see in open economies, and in no small measure in the United States, right? So the funny thing is, like, even though we've got all of these, kind of dynamics that seem to capture and my attention like everyone else's, I think when you look at where um, uh, strength truly lies, deep-rooted strength, strength in innovation, strength in economic growth, and so forth. That the U.S. model still seems to be doing very well. And God forbid that we make a huge mistake, but I think there's a recognition that we need to retain this kind of openness and integration and so forth. But I think is like I'm still very positive, you know. And as far as trade and so forth is concerned, I mean, sure, we perhaps pulled back from some of the trade ties that we built over the last 20, 30, 40 years, 30 years, but we're still a very interdependent world, and it's just a matter of looking at different suppliers. It's not necessarily saying every country's going to build for itself, right?
Got it. I mean, that's a really great topic to end on. It's a really positive way to end, that we're not just going to isolate ourselves as
Yeah,
countries.
no, I mean, I just, sadly, we're getting a little bit away from some of the pragmatic approaches that we've had to problems in the past, but I'd like to think these are just, a blip in time. That's all.
Awesome.
So,
Well, thank you so much again, Michael. This was a great episode.